They called me crazy when I said I wanted to triple leverage the most volatile tech stock in history. They said it was insanity, Tesla's fundamentals are crashing, they screamed. The stock is going to zero, they reported. But here I am preparing to add even more after what mainstream media called a disaster quarter. When everyone else sees disaster, psycho investors see opportunity. And today I'm going to show you exactly why I'm not just holding TSL3, I am aggressively loading more after Tesla's so-called disastrous Q1 earnings. Welcome to Psycho Investor, where we don't just chase yields, we hunt them down and make them our own. I'm not here to tell you about your grandfather's 2% dividend stock or those safe ETFs everyone recommends. Take a look at my actual portfolio right now. You can see our foundation positions generating those beautiful 30% yields overall, bringing it nearly to 33,000 annually in pure passive income. But today, I want to focus on something different, our strategic position in TSL3, the 3x leverage Tesla ETP. Currently, it's just 0.95% of my portfolio. That's small red positions you see there. But after Tesla's recent earnings and the market reaction that followed, I'm planning to double this position. Let me tell you why this might be the most psycho and potentially most profitable move in today's market. Let's start by facing reality. Tesla's Q1 2025 earnings were objectively terrible on paper. The company reported earnings per share of just $0.27, missing analyst expectations of around 40 cents. Revenue came in at $19.34 billion, well below forecasts of $21.1 to $21.4 billion range. Automotive revenue, their core business, plunged 20% year over year. So you're probably thinking, this cycle has finally lost it. Why would anyone buy more of a company after numbers like this? But here's what separates psycho investors from the herd. We look beyond the headlines. First, let's be real about what actually happened here. Tesla's stock had already fallen over 41% from its December high before earnings. The market had already priced in this disaster. This is crucial. When expectations are low enough, even terrible results can trigger a rally if there's any glimmer of hope. Second, during the earnings call, Elon Musk made the announcement that changed everything. He stated he would be allocating far more his time to Tesla, now that his work establishing the Department of Government Efficiency is mostly complete. This addressed one of the investors' biggest concerns, Musk's divided attention. But here's psycho insight most investors missed. Tesla isn't just a car company. It's 5 companies in one: electric vehicles, energy storage and generation, AI and autonomous driving, robotics, these Optimus robots, manufacturing innovation. While automotive struggled, Tesla's energy business grew 67% year over year to $2.73 billion. Think about that. While everyone focused on car deliveries, Tesla energy division quietly accelerated growth. Now let's talk about why I'm not just holding TSL3, I am adding more. What gets my heart racing as a psycho investor is Tesla's robotaxi announcement. During the earnings call, Tesla confirmed they expect to begin volume production of robotaxis in 2026, with testing starting this year. This isn't just another Tesla promise. It's potentially the biggest transportation revolution since the automobile itself. Why does this matter so much? Because the market is valuing Tesla primarily as a car company, but autonomous taxis represent a multi-trillion-dollar addressable market. If Tesla succeeds here, even partially, the current stock price could seem like an absolute bargain in retrospect. Most investors can't think beyond the next quarter, but psycho investors are playing chess while others play checkers. When I look at TSL3, I'm not seeing the 45% drawdown you see on my screen. I'm seeing the potential for 3x leveraged play on perhaps the most ambitious technological transformation in history. Let me break down what most investors miss about Tesla's robotaxi potential. First, data advantage. Tesla has billions of miles of real-world driving from their fleet. Second, vertical integration. They control everything from the chips to the software to the vehicles. Third, manufacturing scale. The gigafactories can rapidly scale production once the technology is ready. And fourth, energy ecosystem. Their charging and energy storage network complements autonomous fleets perfectly. Last night I was driving home in my Tesla Model 3 thinking about the emotional roller coaster of being a Tesla investor. The car practically drove itself on the highway while I contemplated the contrast between the quarterly numbers and what I was experiencing as a customer. The gap between perception and reality struck me as the perfect opportunity for a psycho investor to strike. This morning at 4 a.m., I woke up, made my coffee, and started analyzing the market reaction to Tesla's earnings in the pre-market trading. The stock was up over 10% despite the terrible numbers. This confirmed my thesis. The market is looking past current weaknesses toward future potential. This is exactly when I add to my positions. Now let's talk strategy. This is where the real psycho investor methodology comes in, how we size these positions to build wealth without blowing up our accounts. Currently, TSL3 makes up just 0.95% of my overall portfolio, but I'm planning to double this to around 2%. Why not more? Because even at this small size, when Tesla makes one of its signature moves, this position can significantly impact our overall returns. Remember, this isn't gambling, this is calculated aggression. Look at our portfolio structure. Foundation, beta at 41%, QALD at 27%, and main at roughly 16%. These three make up over 84% of our portfolio, providing stability and consistent income. Enhanced yield. Our option income plays delivering 50 to 100% yields but kept a smaller allocation. And maximum growth potential. TQQQ at 6.22% and now TSL3 at 0.95, growing to 2%. This is how psycho investors balance risk and reward. Our foundation positions generate enough income to fund our aggressive plays. Even if TSL3 dropped to zero, which won't happen with a regulated ETP, our overall portfolio would barely notice. When will I add to the position? Right now. Why? Because Tesla just confirmed their cheap vehicle is on track for first half of 2025 production. The robotaxi timeline is progressing, and most importantly, Musk is refocusing on the company. I'm placing limit orders for TSL3 at 3 different price points over the next week. I never buy all at once. I ladder in to get the best average entry price. Looking ahead, here are the catalysts that could send TSL3 soaring. Q2 2025 delivery numbers. Expect a rebound from Q1. Robotaxi unveiling event. Rumored for summer 2025. Progress updates on the affordable Tesla model. Energy division continued growth and improvements in full self-driving capabilities. Any one of these could trigger significant upside. With TSL3's 3x leverage, even a modest Tesla recovery could generate explosive returns. Now, sometimes I ask myself if I'm truly psycho or just seeing what others can't. Am I the mad one for sizing into Tesla when they report their worst quarter in years? Or am I the only sane person in the room seeing past the noise to the incredible innovation machine underneath? Then I remember, this is exactly what creates opportunity. When fear is high, when headlines are bad, when retail investors are running scared, that's precisely when the foundation for extraordinary returns is built. Now let's talk about the risks, because I'm not here to sugarcoat anything. TSL3 is probably one of the most volatile ETPs you can trade. A bad week for Tesla would mean a catastrophic week for TSL3. That's exactly why our position sizing is conservative, despite our aggressive strategy. Here's how we manage the risk. Keep the position below 2% of the total portfolio. Use the income from our foundation positions to fund these aggressive positions. Never use marginal leverage beyond what's built into the ETP. Average in over time rather than buying all at once, and be mentally prepared for 70% plus drawdowns. Remember, this is a strategic position, not an emotional one. I'm not adding to TSL3 because I'm Tesla fanboy. I'm adding because the risk and reward profile at this precise moment after this specific earnings report with these specific forward-looking statements aligns perfectly with our psycho investor methodology. So what's the psycho investor's take on Tesla and TSL3 after this earning report? When others see disaster, we see opportunity. When mainstream investors panic about quarterly numbers, we are positioning for multi-year returns. While they obsess over slight misses in car deliveries, we are building positions in what could be the most transformative company of our generation. Today, I've shown you exactly how I'm sizing into TSL3, why Tesla's disastrous quarter actually revealed incredible opportunity, and how this fits within our broader cycle portfolio that's generating over 30% yield and almost $33,000 in annual income. If you want to follow my complete portfolio in real time, including every move I make with TSL3, click the link in the description to access my portfolio. You'll see every purchase and every position adjustment as it happens. Drop a comment below with your thoughts on Tesla and whether you think I'm truly psycho for doubling down after this earnings report. Are you brave enough to add leverage to volatility, or do you prefer to watch from the sidelines? Hit that subscribe button, smash the notification bell, and join the Psycho Investor community where we are building generational wealth through extreme yield investing and calculated aggression. Remember, they called us crazy for chasing these strategies. Let's show them how just crazy profitable this approach can be.